Welcome back to Finpod, your daily financial digest. I am Evan, and I am here to help you make sense of today's market action. Before we dive into the numbers, a quick shout out to our partners at Fintwit.ai, your go-to platform for real-time trading signals and stock recommendations. Let's get into it. The market is feeling the pressure today, with major indexes posting their third straight losing session. The story isn't just about the red ink, it is about the bond market. We are seeing a historic surge in Treasury yields, which is rattling investors and fueling fears that the Federal Reserve might keep rates higher for much longer than the market previously hoped. This yield spike is hitting growth stocks particularly hard. The S&P 500 slipped about 0.2%, the Dow dropped roughly 0.6%, and the Nasdaq took a harder hit, down nearly 0.9%. The Russell 2000 also saw significant selling, shedding about 1% as investors rotate out of riskier assets. Geopolitical anxiety regarding the conflict with Iran continues to simmer, keeping oil prices volatile and inflation concerns front and center. In the tech world, the AI trade is still front and center. NVDA remains the main attraction as investors gear up for their upcoming earnings report, with major analysts reiterating bullish ratings and bumping up price targets, expecting another beat-and-raise scenario. Meanwhile, ServiceNow is seeing massive interest after a positive analyst note from Bank of America, which highlighted the company as a top beneficiary of AI integration, helping to clear up some of the market's previous fears about AI disruption in enterprise software. Turning to our movers, Home Depot reported first-quarter sales that were in line with expectations, though they noted ongoing pressure from housing affordability and cautious consumer spending. Despite this, the company reaffirmed its full-year guidance, showing resilience in a tough environment. Toll Brothers also stepped into the spotlight today. The luxury home builder beat revenue expectations and, crucially, raised its full-year guidance, which sent the stock higher in after-hours trading. Their report shows that while the broader housing market is facing headwinds, the high-end segment remains surprisingly robust. We also saw earnings from Keysight Technologies, which delivered record quarterly results, including all-time highs in orders and revenue, leading them to raise their full-year outlook as they capitalize on strong demand. On the flip side, we have BILI, which reported first-quarter earnings that beat analyst expectations, driven by solid user engagement and advertising growth, though the broader Chinese market environment remains a factor for investors to watch. CAVA Group also reported this afternoon, showing strong revenue growth and raising their full-year profit guidance, proving that their fast casual expansion is hitting the mark with consumers. To wrap things up, it was a day defined by yield-driven anxiety and a stock market searching for stability. Investors are clearly playing defense, keeping a close eye on inflation and the Fed. If you enjoyed this breakdown, please like, share, and subscribe to the channel, and drop a comment below if there is a specific stock or sector you want me to cover tomorrow. For stock recommendations, visit Fintwit.ai. Thanks for listening, and I will catch you all tomorrow.